Welcome to this video. Today we need to talk about ServiceNow. ServiceNow is now trading at $126 and it's up over 30% in the last month. And if we look today, it went down by roughly 7%, which is interesting. And this could be an opportunity. So in this deep dive analysis, we're going to go over the AI strategy of ServiceNow. We're going to go over the intrinsic value, what the true valuation of the company really is. And we're going to go over the latest news. And of course, we're going to answer the question whether today is a great time to buy more shares. So without further ado, let's dive right in. So 3 weeks ago, I made a video on why I decided to buy more shares of ServiceNow. And then I asked the audience whether they were bullish or bearish on ServiceNow. So the majority of the people here on YouTube post said that they were bullish and the stock went all the way up. But the question is today still a great buying opportunity? Well, let's go to the chart. We're now here on the charts on TradingView and we can see ServiceNow is trading at $126. We can see that my average cost price is around $95. And we can see that the stock has been in a long downtrend where all the exponential moving averages are in sequence and sloping down. But recently there was a golden cross on the short-term moving averages, and this shows that the short-term trend is now bullish. We can see the stock making higher lows and higher highs, which is an indication of a trend reversal. Besides that, if we look here at the seasonality, we can see that June is generally a bullish month with an average return of 4.83% if we look at the last 14 years. And July and August are generally also bullish. So based on seasonality, the probability that the stock will go up is significant, which is interesting to see. So what exactly is ServiceNow? Well, ServiceNow is a software company that helps large companies run their internal operations more efficiently, and they're implementing AI to make it even better. And here we can see that 85% of the Fortune 500 companies is using ServiceNow in their business. And we can see here big names like PepsiCo, FedEx, Booking.com, Adobe that are using ServiceNow to help internal work. And we can see a renewal rate of 98%, which means that customers are very satisfied. And it's also difficult to go to a competitor. So they have high switching costs. And this is a company with a great economic moat, which we'll talk about later. And we can see over 95 billion workflows, which is also very impressive. So why is ServiceNow stock still down almost 50% from all-time highs? Why is there so much negative sentiment in this software stock? Well, because a lot of investors and sentiment was that software stocks are going to be replaced by AI. But recently there was an article that said that Bank of America reinstates coverage of ServiceNow, Salesforce. It says one is an AI beneficiary, which is very interesting. So they are actually profiting from AI and they're implementing it heavily and they're making money from it. So they're not really behind, and software companies are not going to be replaced by some AI because they are basically using it to make their company even better. This explains why the current sentiment is very bullish. We can read here the primary driver of bullish sentiment is the company's extended rally fueled by the AI optimism and expanding AI partnerships. This is further supported by a record retail buying in software ETFs, indicating a broader positive trend for AI-related software companies like ServiceNow. So instead of thinking that these software companies are going to be replaced by AI, now people are thinking, hey, they're going to use AI to become even better. And this is the opportunity. So I think that the next big growth driver for ServiceNow is going to be the AI control tower. So here in this article, we can read ServiceNow expands AI control tower to discover, observe, govern, secure, and measure AI deployed across any system in the enterprise. And we can see here that the AI control tower gives enterprises control over every AI system, agent, and workflow, regardless of where it runs. So businesses can use the AI tower to get a better overview of their company, and the AI tower is going to discover, observe, govern, secure, and measure all the internal work of the AI agents. What does that mean? Well, in a company, you have people, employees, real people, but you have many AI agents. So every company almost have so many AI agents, and it's a big mess. So you have Salesforce, ChatGPT agent, Microsoft Copilot. They use all these services, but they need control and a better overview. So ServiceNow delivers the AI control tower, and it's basically one central place to govern, monitor, and orchestrate work across people and AI agents. And this overlaps a little bit with the enterprise agentic AI market. And this market is growing fast. So we can see by 2030 it will grow at a compounded annual growth rate of 46.2% from 2025 to 2030, according to this article. So this is a big market, and ServiceNow is going to implement more and more AI and they can really capture a lot of the market. In short, this is not just a software company, but a AI software company. They're implementing AI, and that is great. So ServiceNow announces expansion of AI capabilities, and we can read here also strategic partnership with major cloud providers are formed, and these are helping this company. They are definitely in the right market and they're doing well, but is it also a strong fundamental company? Well, we're looking here on Guru Focus, and they give it a score 76 out of 100, which is pretty decent, but of course it's not like the highest score that there is. But if we look here at the financial strength, we can see it's an 8 out of 10, which is pretty good. And the profitability rank is a 7 out of 10. We can see that the probability of bankruptcy is essentially 0 if we look at all the ratios. If we look here, for example, at the revenue and net income, we can see that it goes up exponentially. We can see the cash levels much higher than the debt levels. And this looks like a perfect example of a great company. If we look here at the quarterlies, we can also see that revenue goes up and the net income is also pretty steady, while the cash reserves are much higher than the debt level. So this company isn't taking a lot of leverage, which is good. Since my last video, the stock went up like a lot, and now it's trading at $126. So is it still cheap? Well, let's find out. We can see here, we can look here at the price to earnings ratio. We can see it's at 75, it's in red, which suggests that generally speaking, 75 is pretty high, right? But we can see that the earnings per share are expected to grow by 20%, which is pretty solid. And I agree with, I think they can easily grow 20. And that gives a PAC ratio of 1.2, which is pretty decent, to be honest. So a PAC ratio of 1.2 is pretty average. It's not like super cheap, but also not expensive. But let's compare to the to other companies. So here we can find the PAC ratio of ServiceNow, and we can see it to the competitors. So we can see that Salesforce is a little bit cheaper at 0.93, but CRWD crowd is 6.03, is much higher, and Snow is like 7.24. So the peer average is 3.9. So it is potentially undervalued if you look at like similar companies. And if we look at the price to earnings ratio, we can see that's fairly valued because a lot of these companies that are like in these software companies have like high PE ratios, but Salesforce is looking cheaper if we just look at the PE ratio and the PAC ratio. To get a precise intrinsic value, we can use Warren Buffett's owner earnings intrinsic value calculator based on a discounted cash flow model. And what we're basically doing is finding the owner earnings, which is this formula, net income plus depreciation and amortization minus capital expenditures minus the change in working capital. And we discount all the owner earnings to present value. And we divide it by the amount of shares to get the intrinsic value per share. And we're going to use the growth rate of 23% and a discount rate of 5. And let's find out whether this company is cheap or expensive. So we can calculate it, and we can see that based on these calculations, it's now a little bit overvalued. So the intrinsic value is roughly around $107, but now the stock price is $125. But to be honest, I don't think it's too much of a difference. Like, I like to calculate the intrinsic value to find out whether we are in a bubble or not. I don't think that this is a bubble. It's just like a 15% difference, but the market is irrational and the company is still growing. So this is not necessarily doesn't mean that you cannot buy it anymore, because what's much more important than just the valuation is whether the company has a wide economic moat. An economic moat is a theory popularized by Warren Buffett himself, and it basically tells you whether a company has a competitive advantage. And this is one of the most important things, because if a company has a wide economic moat, it will do well over time. And let's find out whether ServiceNow has. So we can see it's an 8.2 out of 10. So it is a wide moat, which is great. So this company has a strong moat based on brand power, switching costs, network effects, cost advantages, and tangible assets. But the strongest by far is the switching costs. So the deep integration of ServiceNow's platform into critical business processes, data, and employee workflow creates extremely high switching costs for customers. So once they are implementing ServiceNow, it's basically embedded in their whole business, in all their operations within the business. And to go to a different software is super difficult, gonna take a lot of time, a lot of money. So you might as well stay with ServiceNow. They have a renewal rate of 98%. So this company has also a lot of pricing power. So they can raise the prices and people will still stay. And that is great. So I would say that the moat is extremely wide of ServiceNow. And that's why I'm very confident that this company will go higher over time. And I'm not going to sell. I will just I will hold my position for many years, because I believe that this moat is very strong. So let's in verdicts. So ServiceNow possesses a robust wide moat, primarily driven by exceptionally high switching costs due to its deep integration into enterprise operations. Its strong brand and continuous innovation in workflow automation further solidify its competitive position, making it a formidable player in the enterprise software landscape. So here we can read also the strength and weaknesses. We can see like high customer retention rates due to embedded nature in the platform, broadening platform capabilities beyond ITSM into HR, customer service, and other business functions. Strong R&D investment leading to continuous innovation and feature expansion. But this company has like weaknesses as well. So like reliance on large enterprise customers, making susceptible to economic downturns affecting corporate IT budgets. So if there's going to be a financial crisis, then maybe some companies are going to want to reduce cost, and maybe they're going to leave this company. Intense competition from other enterprise software giants and specialized SaaS providers. There are competitors, there are other companies that are doing similar things. And of course, the complexity of implementation and customization can be a barrier for some organizations. In short, this company has a wide economic moat, and the company is not too cheap. It's a little bit on the expensive side, but I would say this is definitely not a bubble. So I'm still very bullish on this company. So it appears expensive, based on the trading at a significant premium across key valuation multiple compared to its historical average and many SaaS peers. But this premium reflects strong growth expectations, but suggests the stock may be priced for perfection. So there's a lot of growth expectations. That's why the price to earnings ratio is high. We are now here back on the charts again, and we can see it's trading at $126. So in short, I would say that ServiceNow is a great company, and there is a small correction. Maybe it can correct more, but I think that buying right now is still a great buying opportunity, because the company is great and a great business goes up over time. But if you want a bigger margin of safety, then you could wait for a larger pullback. But of course, that's not guaranteed. We can see that the short-term trend is reversed a little bit. We can see higher highs and higher lows. And so yeah, I already bought at $95, so I would just hold my positions for many years. And I will only sell if it's like super overvalued. So right now it's just a little bit, it's slightly expensive, but it's not like a bubble. So I'm very comfortable just holding my position at least for the next few years. Of course, this video was just for educational purpose only, but if you like this kind of video, feel free to like and subscribe for more. And if you want to learn more about stock analysis, then check the links in the description down below. And with that being said, I hope you have a great day, and I'll see you in the next video.